Dollars on our mind. Ideas all the time. We might get distracted, but we're building wealth just fine. This is dollars and distractions. If we went off track, just know we're coming back. More money, more mindset, no holding back. Dollars and distractions.
Hi, I'm Beck.
Oh, serious Beck.
Is it?
Yeah, and I'm Maryanne. And this is take 2 for Dollars and Distractions
Why is that?
because Maryanne has a head cold and Maryanne forgot to hit record. So we're 36 minutes worth of content.
Was it 36 minutes?
Yeah.
Yeah, that went really quick.
I'm glad you say that because we're just about to do it all over again. But at least we now know what the topic of today is. The topic of today is it's not just the interest rate. Yeah, it's not just the interest rate.
It is not just the interest rate.
Yeah. So we were having a conversation this morning where a client is coming in to meet with me tomorrow, and he said, you know, I'm on a high interest rate. I want to try and see what we can do. And as a mortgage broker, that's 100% in my wheelhouse. That's my job. He's an existing client. Naturally.
Wheelhouse.
What? Isn't that a saying? That's not in my wheelhouse.
I'm sure it is. But what is a wheelhouse? When I think of wheelhouse,
What is a wheelhouse?
I don't know. I'm going to Google it later.
We can't Google it now because we don't have our phones. I already had to run and get the calculator,
Don't stress,
but
I'll
that's
forget about it later.
we'll Google it. I'll put it in the show notes.
Yeah.
No, who am I kidding? I'll forget. But so, and then I said to you, yeah, he's on 6.89%. And your first reaction was one of what every single client would do.
Pretty high.
Yeah. And then when we get to the crux of it, what's the crux?
I wasn't going to say
This is not going down a good route. Because it's take 2, because we're recording all over again.
This actually has more personality.
Yeah, true. even when you started it with, hello, I'm Beck.
But I am Beck.
You are Beck. But you were serious Beck, and I'm not used to serious Beck. I don't ever meet serious Beck.
All right, well, see, this one's for us.
It's kind of like how I said to you yesterday. Remember I said to you yesterday, the football mums haven't met the real Maryanne yet? Because they're still very much like, is it the Scorpio in us? I
We
don't
were
know.
just talking about alter egos, remember? Maybe that's yours.
Yeah.
Is that what that means? We've got different.
We have so many questions today.
It was about interest rates.
It was about interest rates. Now it's about alter egos. No. All right, let's bring it back to the interest rates. So his loan balance is...
He's concerned.
He is concerned, and probably rightfully so. If you're at a barbecue and someone said... If I was at a barbecue and someone said to me, I'm on 6.89, I'd be like, tuk, 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 in my head, thinking back to, you know, what are the rates when they're flashing up on our screen, the best rates? That is high. But then the reason we don't always look at the rate can be a myriad of things.
Circumstantial.
Absolutely. Also preferences. All of these things come into play when we're packaging up, this is the best lender for you, or these are the top 4 lenders for you. And so I think you're at risk if you're at a barbecue just talking interest rate. You're at risk of thinking you're on the wrong thing when there may be a very valid reason.
We also haven't, probably because this is our second time around, we haven't exposed how much that loan actually is.
Yes.
So the loan was about $120,000.
Yep.
And he's on 6.89.
Yep.
So context to that is generally a lot of lenders won't price or reprice under 150, and a lot of them have packages that give you discounts. You know, you pay your annual fee of $395, seems to be.
Yeah.
And you get a discount off your rate. You get blah 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 free accounts. He doesn't qualify for those things anymore because he's under that.
Well, the irony is he with some lenders he could get it, but it's going to cost him more to pay for the package than the discount he's getting on the loan. So there's no point.
Yeah. Yeah.
And so we worked out too that the interest rate we're talking, so when you go
On that loan amount?
Yeah, on that loan amount. Sorry, yeah, on that loan amount was $280, let's say.
A year.
A year. Thank you for I'm not being very clear.
I'm here. Hello.
The head cold has got me like, what? But no, you're absolutely right. So $280 a year. And not to sneeze at that. That is money in the bank's pocket for no reason.
Yep.
But the cost of moving, like we talked about earlier, the cost of moving would be mortgage registration and mortgage discharge from the current lender would be $500 roughly altogether. And then you said there might be a settlement fee.
From the lender.
Yeah, so maybe say $300.
Application fee if he doesn't
Application
qualify
fee.
for a package.
He's not going to qualify for a package under those costs. So application fee of say $600-700. He's going to have to stay with that lender, the new one, for years before he just covers the cost of moving.
Yeah.
So then I think my conversation with him tomorrow will be more around he's getting close to that retirement age. Can't give him any advice on that. But I can give him or put him in touch with people that can give him advice that may say pay the bare minimum on your mortgage and let's siphon money into your super. They may say let's smash off that home loan and get you debt-free come retirement age. Whatever that looks like, that's more of the conversation I'm going to have, along with these are the numbers. Let me show you what a 0.25% discount would look like on your mortgage and why I would be reluctant to move you. If he's adamant he wants to move, obviously it's something I can help with, but it's not something I would be encouraging because I don't think long term it's not going to benefit for him. Yeah. So the only time I would do it is if he said, I don't care about that. I want to move. I want to know I'm on a better rate. Yeah. And most times when you educate people and show them the cost of moving versus your overall savings, they say, actually, I'll just stay where I am.
And in fairness, I feel like I'm repeating myself, but I'm not really because this is the first time around.
You are repeating yourself because I don't know how to hit the record button. Oh, my goodness. I just glanced down to check that the microphones were on.
Are you kidding?
No, they are. I was like, could you imagine? Could you imagine?
No.
Do you know what? I think if the microphones were turned off at this point, I think I would just shut everything down, turn the lights off and go
Start
home.
again tomorrow.
I'm like, not today.
Not today. I've forgotten. Oh, we have created a world, like we are in a world where the rate has become a big thing. Like everywhere we hear, Reserve Bank is meeting, blah, 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 it's going to go up, it's going to go down. My mate over here has got this rate, and everything comes down to a rate because that's probably the only thing that you're hearing as well.
Yes.
So when you come, and in brokerland, I guess it's not always just the rate you look at. If someone comes to us and we have a chat and that's, let's say they're doing a purchase, we will look at a holistic view as to what policy meets their circumstance. Are they self-employed? Are they, how much deposit do they have? Do they, which lender will lend them this?
Lender policy.
Yeah,
we've had one where this morning we had to quickly reassess and divert because the lender we sent it to can do it, but it's a timing issue and we're not going to meet finance. Yeah. So we're like, cancel that. Let's go with this lender who we don't really love. They weren't our preference. They weren't the client's preference either, but let's get it in, get this property secured, and then revisit it later.
Side note on that.
Oh, okay, Wiggles.
This is where like I say the same thing. Side note is if we had ever had a pre-approval for that particular loan, because the client did put a contract down on the property before we were able to, we had just started a pre-approval, but...
By just start, you mean we'd started collecting the information?
Documents.
No, we hadn't actually submitted anything or got the okay from the bank,
The circumstance was very different too, like there were multiple parties, so it wasn't your, boxed, like,
your vanilla deal.
Yeah, it was, try and find a lender for that policy.
And so just quick side note, vanilla deal in our lingo means easy. Yeah. Like high income, low debt, super easy deal. Do they exist anymore?
I was just going to say, isn't it interesting? I don't know if you'll play this, but isn't it interesting that when you come to vanilla, there's only a few things that people go, she's vanilla, or, like mortgage lending's one and then...
Oh, yeah. Which is why it's important to specify what we mean by vanilla.
We're brokers. I'm not really a stripper.
Not a stripper.
No.
If you haven't had a chance to check out our reel yesterday.
Who's reel? It's all about.
It's your reel.
Oh, No. It's not my reel.
I stitched Beck up and she's not the biggest fan. No. She's got a great sense of
Okay.
humour. I'm so lucky to work with someone who can just laugh things off. But a lot of people didn't understand that it was in jest and that I'd had taken your responses to normal questions and then put my own questions over the top with a voiceover to make it sound like you wanted to be a stripper when you were 5 and your partner wishes
Although I
that you
didn't have
had
the greatest role
more
models,
honesty.
maybe that was- I did not.
I mean, look, the money's
Didn't
not
go that
bad,
way.
I've heard. I don't know. No one's paying to see this strip, I can tell you that.
Leaders. Yeah.
We're off on a tangent. But check out the reel. It's pretty funny. I'm pretty proud.
Yeah, it was pretty funny. So to bring it back, that deal, we picked a lender based on the circumstance and the policy that we thought would have met that. Didn't turn out to be that way. So unfortunately, there is a lender that will do it, and they are an okay lender, but as you said, wouldn't be the preference. It's not the best rate either. It's not.
I mean, it's not a horrific rate, but it's
No.
definitely not the rate we were looking at with the other lender.
No way.
And so if that client went and spoke to someone else might say, why'd you go with that bank? You should have gone with that one. And then a lot of the time, unless you're in the industry, a lot of the time clients don't they don't know why we explain it. This is why we are going with this bank. But sometimes they may not know or may not remember those reasons. Yep. And I know this because I had a client who's looking to do some renos to their property.
Yep.
And I said, okay, send me your stuff and you're with this bank. Why did we go with that bank again? Remind me. And she said, I don't know. And I said, I wouldn't put you with that bank unless there was maybe something wrong with your credit file or there's some other reason. I don't go to this bank unless it's outside the square, outside the box, very unvanilla. Neapolitan. Anyway, I wouldn't go with that.
Oh, yeah.
Yeah.
Penny drop.
And then I ordered their credit files, and sure enough, there was very much a reason why we went with that lender and not Mainstream. But the client had forgotten.
Yeah.
They'd completely forgotten. They just knew that they weren't paying the cheapest rate and they kind of wanted to do some renos and move their loan over to a cheaper rate. So obviously with their credit files in the spot they're in at the minute, we still have to wait a couple of months before we can do that. But at least they have I guess my point is, what is my point?
Well, I'm guilty of this too. You know, I just bought a place. It didn't have a pre-approval, and the bank that we went with wasn't probably my first choice, but it was
definitely
one,
wasn't your first choice.
It was one that would suited us as a couple and our circumstances and timing. Timing was great. But it's
I
something
also think you're actually going to love them for a little bit.
I love them. I have loved the experience with them. They've been very transparent, very helpful. They're onboarding, and sometimes it's not always about the rate. Like the service has been really brilliant. But in saying that, I think the point that you were trying to make is,
thank you.
It might be a great deal at the start, but us and our role and our job is to then we continually keep revisiting. And as we were saying before, Gem is out there pricing deals, so that's the service you get as a broker from a broker as well. Is that we will constantly move. You know, your loan can move with you. So I myself might come in the next couple of years and go, okay, well, we don't need to be with this bank now. Let's rate shop, or maybe our circumstances will change, and there might be a lender that is more beneficial.
Absolutely.
To us. But circumstantially, buying that place, that lender suited us. It just wasn't the best rate.
Yeah.
And that's okay.
And I think to your point too, with Gemma doing pricing, so I joked the other day with her because she said, well, once I get to the bottom of your list and I've priced every single client that we have at 360 Mortgage Solutions, what happens then? And I said, well, I print you out a new list, you start at the top and you go all the way back through again.
Yeah.
Which she, bless her, did not look too enthused at, and I don't blame her because it's tedious work. But the things along the way can change behind the scenes. And if you're not constantly pricing, and this is definitely something that banks don't offer, but brokers do, if you're not constantly checking, when Gemma does pricing, she'll do a property report on that property first and see what's it valued at. And then the loan to value ratio may have changed from when that person first bought to now. So what I mean by that is if the value of the property has gone up and the loan amount has gone down enough that there's a bigger gap, that's the loan to value ratio. Yeah. So if you're at 95%, your interest rate's going to be a whopper because to the bank, that's risky. They're copping all the risk.
And for context, what we were saying is that different percentages of that LVR, say your amount that you are borrowing against that property, a lot of lenders will offer you different rates based on
Absolutely.
that. Yeah.
Yeah.
People may not know that.
And then once you get to like 90%, the rate might come down a little bit.
Yep.
80% come down a fair bit.
Yeah.
And then once you get to that 60%, the bank's like, your risk there is, and especially if you've got
Quite
a
low.
high,
Low.
yeah, it's low.
Yeah.
And if you've got a high loan balance too, they want to keep you. So we'll do pricing at that point, especially to make sure, well, hang on, the property is now valued at this in Bendigo or ING, whoever your bank is, and the loan is only this. Give us a better rate or we can take the client elsewhere. And that's not to say that we absolutely will take the client elsewhere. My preference is to try and keep people with the bank. If they're happy with the bank and they're offering a comparative rate, why would we be moving you around every 5 minutes?
Yeah.
But if they're not going to offer a comparative rate, one of the beautiful things, one of the tools in our arsenal is a refinance analysis.
Yep.
And that's where the software does all the intricate calculations for us.
Yep, the numbers.
Yeah. And I'm going to take you through one today to share with the client. But effectively we put in, what are they currently paying on what loan balance and what loan term? What's the new thing that we're offering? What's the cost of moving? And then overall it spits out in the first year, this is how much it's going to cost you, because in the first year it might cost you to move, or it might be you save $2,500, but it's going to cost you $1,500. So your overall savings is only $1,000 in the first year. But then in the next subsequent years, how much are you saving? Yeah. And then overall for the rest of your 25, 20, whatever your loan term is, how much have you saved? Yeah. And then as a client, you can go, love that, Maryanne, let's do it. Or you can go, you know what, that's not enough to make me get all my pay slips and send you my bank statements. Let's just stick with the lender we're at.
Yeah. And I think the topic is, if the topic is the rate doesn't always matter, those customers we're talking about who we're doing the deal with right now and the rate may not be the best, we are doing a refi, and that little calculator thing has said that's probably not the best refi option. Like
Yeah.
I've seen that, and it's not. But going past that, they want to buy another property off the back of that. So unfortunately, that's probably just what they have to do for now to get to that goal.
Mm-hmm.
And that's where I guess we are important too. But we want, your goals will change all the time. So that's the discussion we will have, ongoing.
I've had a client refinance from a mainstream bank. And one of the most important things to her was that she went with a lender that did not invest in coal mining. It's very, very important to her. So I went and researched. I had to research. I didn't have ChatGPT back then, which would have been brilliant. And I was like, okay, if the lenders on my panel I have access to, who doesn't invest in coal mining? Obviously the majors are out. There was Teachers Mutual and Wealth. So I went to her and said, these are the two offers that you've got. I think there might have been one other, Unibank maybe. Anyway, these are the options you've got. The interest rate was on par with what she was paying. So it wasn't a discounted rate. Long-term cost of moving, she wasn't actually saving any money. It was actually costing her a little bit just to move. I'm honest with that. Here's a copy of the refinance analysis. It's actually going to cost you to move. And she said, great, don't worry. Happy to move. Let's go.
It was a principle for her.
It was the principle for her. And I actually really dig it. Side note, what Wealth do, they have a partnership with Parlay. And I think it's, don't quote me on this, I'll need to check. For every certain amount of loan they give, they will clean up 50 hectares or something, or 50 meters squared of the ocean.
Yeah.
Then they collect all that rubbish out of the ocean, which I love. I love going to Lady Musgrave, love swimming with the turtles. Breaks my heart to hear that we are ruining our backyard. They take all that trash out and then they use that trash to make your key card. Yeah. So you have a bit of the ocean. I don't know, I just love it.
Yeah.
Do you know?
Absolutely.
Like it's all about sustainability and I really dig it. So when she chose that bank to go with, another side note, I had another broker friend of mine who I did a self-managed super fund loan for, and we went with Wealth. And the main reason I suggested Wealth to her was because the property she was buying was a rental property that they used for scientists who were working on how if cows ate seaweed, there was less carbon emissions
wow.
And she's called me up and said, I found this property and the scientists live in it. And I just love that. I love that, yes, I'm building my wealth, but I'm doing good in some minute little way. And when she said that, I was like, girl, I have the bank to go with that purchase.
Doesn't that show you, I think, that in the archaic times that we did only have a certain amount of lenders? You know, you got your main four and you've got lenders, but you wouldn't know that there's that many lenders out there that offer things different like that.
And if you go to ANZ and speak to your bank and say, oh, I'd really like a sustainable bank, please, they're not going to say, oh, have you heard of what Wealth are doing? Go speak. They're not going to do that. They're going to say, oh, I don't know what we I don't know what we invest in. Sorry.
Yeah. So it's not always about the rate.
No. And I think that's the.
How cool is that though? As brokers, we have. I still keep coming. It's cool that we are brokers, that we have access to that.
Yes.
To offer to people.
I know that our first investment property we only got because I'm a broker and I know what lenders can do. So we did what's known as a low doc loan because at the time the business was doing really well, but I didn't have a full set of financials. I had 6 months of the first financial year showing a trajectory going really well, but no financials. So, and this was right before COVID. And so I said to my husband, I really think right now is the time for us to buy an investment property, but I don't have a tax return for us to go to a mainstream bank and say, hey, look how good I'm doing. Yeah. I used 2 BAS statements and we paid, I think it was 8% interest. Maybe it was less, I don't know. But it was much higher. Yeah. And usually my husband, who is a little bit of a worrywart, I would have thought he would be like, no. He was like, yep, fine, that's all good. We got the property for $495, don't quote me, I don't remember. Yeah. And then because of COVID, we watched the property value go up and up and up. And then 6 months later, I had my full financials, took it all, refinanced it and went with a new bank. Yeah. And it was definitely, and this is sometimes a plan I have for some of my clients. So sometimes it's not we're going to put you with this lender and then just price it every year and off you go. Yeah. It's going to be, okay, we're going to stepping stone, we go here, and then when we get to this point, we move here, and then, we reassess and we work with them through that. Yeah. But
I think that's to reiterate that I don't think that, and I'm sure most brokers are the same, but I know that here we are not just write your loan and see you later. It's like to stay with you through the stages of life,
Yeah.
Because it changes. Your goals change over.
Well, I had a meeting with a client yesterday on the phone and she is now pregnant. Yeah. And so she's like, I remember you said if I get pregnant to call you and we'll talk about fixed rates, but I don't remember anything else. So what do I need to tell you? And I was like, great, let's chat. Yeah. And it's just more about, I'm sending her a budgeting template so that she can look at what the budget looks like when the income's not coming in. I'm going to send her some fixed rates. I don't think they'll go ahead with them because I think they've got it all covered. But it's just checking through those, okay, well, you've got a huge milestone that anyone would think having a baby has nothing to do with my home loan. But actually, when you've got brokers that, want to work with you and help you, it could actually have a big impact on your home loan.
Yeah, because your circumstances are changing.
Yeah. Everything kind of always comes back to financial to some degree.
Absolutely. Well, it's like I think everybody would be the same when you don't. Money does not bring you happiness, but it does bring you stress when you don't have it.
Correct.
Or
yes.
You don't know what's happening with it. So on the flip, it's not always happy, but it does create angst.
Absolutely.
If it's not done properly.
Yeah. I remember a family member of mine, I talked into fixing their rate because I knew they were going to have a baby and I knew they were going to have that mat leave and interest rates at the time were a little bit higher. And then that, luckily for me, they fixed. And I think some people were a bit like, don't know that they should have done that. Some family members might have been like, I don't know that you should have done that. Rates went up and up and up and they were fixed on mat leave, just living the dream, enjoying the time with the baby and not stressing about what.
To stress about.
Yeah.
Also, too, if you're, in that stage of life, I suppose as you get older too, like elderly, mature, and if you want to cut down on working as well, there's different circumstances in life.
100%.
Options are there.
Yeah.
You're not meant to know about them, but we are.
Yes. Yeah. Yeah. So it's even just worth a phone call. I think the key takeaways that we want anyone listening to this to do would be to check out your interest rate more from an open mind point of view, because there may very well be a reason you are paying the rate you are, but there also may be an opportunity, if it's high, to get that back down.
Is it, on the flip, not everybody has that $120,000 loan.
Yes.
0.25 on his loan might not be much, but 0.25 on a $1 million loan can make a huge difference too.
Yeah, so we did the calculations for that and it was $2,500. Which I would want in my pocket rather than the banks. And then there'd be some clients that go, oh, it's better the devil, I don't want to change everything. I'll just, 2,500 is nothing.
Yeah.
For me, I'd be like, okay, yep, I'm moving.
Yeah, 100%.
It's worth it.
Yeah.
But you're absolutely right.
Yeah.
So checking out what your rate is and then calling a mortgage broker, I'm obviously going to say one of us.
Yeah.
But
just to revisit, like if you haven't in a year or two, hey, because, well, I don't know about you, but 2 years ago my life was different to what it is now.
yeah.
And in another 2 years it might be different again.
And back to the point we made earlier about loan to value ratio. So if you bought, say, 3 years ago, your property would have ideally grown in value substantially in this market, really. And your loan, you would have been, chipping away at it. So there might be a bigger loan to value ratio gap.
More
That means you're going to get a better discount. But if you don't ask, you're not going to get.
Yeah, absolutely.
Yeah. And that's a wrap.
That is a wrap.
All right. Let's do our intro music.
Is on our mind. Ideas all the time. We might get distracted, but we're building wealth just fine. This is dollars and distractions. If we went